Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
There is a potential. I feel there's a potential for a good 150 to 200 point move up at some point here. And that's where I was saying a little bit earlier, my intuition says we're going to get a little bit of good news that gets people back in and going, hey, things are starting to get okay again. And I worry that that is then going to turn into a cascade that takes us down towards 5,000. That's just my little...
No, this is exactly what I wrote for clients. I said, okay, more intermediate term risk level. I have SPX 55.25. This is before, right? So we're already down in that neck of the woods. Anyway, for this leg, and then we have this kind of counter trend bounce, but I don't think it's going to be so meaty because there's no policy intervention that is expected to come in. Anyway, and the next thing I'm looking for is a major crash support level at 52.65. We're not there yet. We're still working out these mechanical flows. But I do have to put one thing in perspective though. As bullish as it looks to have these levered ETFs exhausted from their selling, as bullish as it looks for the guy that I just talked about there, Marko Kolanovic, is very, he's like, we should have a bounce soon. There is on the other side, Morgan Stanley came out, their quant desk, putting out this unless so they're even hedging their bets, unless deceleration versus last week, it's still kind of chunky, but this is still pale compared to projections should leverage come down to levels we saw in 2022. That would lead to another 225 billion of supply from this group, talking about the CTAs, the vol strategies, the risk parity. Volatility controlled strategies would be the biggest sellers. You do have to kind of say, oh, it looks really good for a bounce, but then what happens after that?
Well, that's it. And everybody listening, just, you know, no one knows exactly what's going to happen here, but that could be the big suck everybody in moment where we do get this little bit of a vacuum. And I'm going to show you guys, and we can see it here. We've got VIX Vega. So we can see the Vega, meaning this sort of tendency for things to panic to the upside in VIX and to the downside in the S&P. That's subsiding a little bit. We're having some of this negative, this accelerant, as I often call it, this sort of kindling that's sitting there ready to catch fire. That is disappearing a little bit as compared to last week, moving on to this week. And as we go towards April, we start to get rid of that short put from the caller, right? The JPM, here we are again talking about the JPM call. Isn't it amazing? We're talking about the call side up around 61, whatever it was, 50. Now we're sitting around the put side where there's that significant dealer short gamma.
55.65, isn't it? That part of that put spread. So we're right at it.
Yeah, you're right. 55.65, exactly. So it's amazing. JPM's really got it figured out. I know it's just sort of, there's no discretion there. It just, they do what they do, but it just so happens that we spent these, I don't know how many expiries in a row we've kind of spent around these important spots. Usually it's the call, right? Now we're actually sitting by the put. We haven't seen that one in a while.
That's the point. We had 2 years where NASDAQ doubled from January 2023 until the end of 2024. And they basically rolled into their upside sold call every single quarter. I don't think without exception. This is the first quarter they haven't. So we definitely have a big change as it relates to it. That's right.
It's a big change.
But I believe very, very firmly it's money going home. 17% of the US equities market is owned by foreign interests. And money is going home. They're incentivized to go home, period. So we definitely have more risk than reward on the upside. Although I know that's not where most analysts are still consensus bulls. Not one analyst has come in with a sell side, with the sell rating on NVIDIA, for example, despite DeepSeek coming in and deep sixing all of the semis. The semi sector has been atrocious. They're still not throwing in the towel. Not one has come in with a sell side, despite the fact that Microsoft is cutting this and competition with Quen from Baba or Manus is the newest one. So this whole AI euphoria that has hit data centers and power producers and software and hardware. Apple was supposed to be the golden child receiving all the benefits by not being a hardware company. Nope. They're right at that 220. Exactly. Right. So the point is I was re-rating these companies a month ago. We talked about this. Recession risk was not priced in. So now they're starting to say, maybe we should re-rate these earnings plays like Delta coming in and saying, oh, by the way, and then the airline sector just dumps, but it was already starting to, or American coming in yesterday and saying 50% of our government contractors who travel often are gone. We literally just lost 50% of our a huge base of business. So my point is they have not re-rated. The market re-rated before the analysts did. They'll catch down.
Yes. Negative gamma to the upside, which means there could be a little bit of an air pocket in something like NVIDIA and a couple of these other ones that have been trounced, like, I don't know, maybe a Microsoft. Maybe there's a beautiful play in there on a temporary basis, because I agree. I think we run into the wall of reality at some point here where there is going to be nothing but negative headline, analysts re-rating. We know how the analysts are. There's going to be a lemming show at some point where it's going to be one after the other falling off a cliff going, oh, wait a minute, I better get on board here.
They're not willing to concede yet. They're not there yet. A 10% pullback is nothing. It's garden variety for most market practitioners. So they're not worried about this. They're still buy the dip. But it is very interesting to have Citibank come out yesterday and say, we're going to downgrade US stocks and upgrade China stocks. And then today, JPMorgan came in this morning and said, we're going to downgrade US stocks and upgrade China stocks. They're a little late. China's already done a massive move, and we already had, SPY, of course, down 10%, Qs more, but now they're starting to look at this as it isn't going to be so easy to get economic growth with the current macro backdrop and with earnings as good as it gets now going underneath, a little bit more suspect, kind of views. So anyway, this is definitely a time to be actively trading, actively protecting. It doesn't mean we're going to not have a fabulous bounce. I don't know, to be perfectly honest, until I can see my intermarket stuff turn, which is why I have been very persistent in this bearish view, because I have not seen the buyers step in. I have not seen their hammerings or selling puts.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.